The Zacks rank, value, momentum, growth, and income all factor into Zacks rank buys.
Welcome to another edition of Zacks Rank Buy. I am Brian Bolin, and I am the aggressive growth stock strategist here at Zacks, and I'm in the studio today. I know you guys miss me. You see me doing those Skype videos, and you got that little picture of me in my red jacket. But now you get the full effect. You get to see the full jacket on me live and in person. I know this is a treat for you. I know it's a treat for me. So let's just go ahead and jump right in to our first stock, and it's Synaptics, and the ticker for that one is SYNA. Synaptics, it's a Zacks rank 1. It's got an A for growth. That Zacks rank number 1 means it's a strong buy. A for growth and a C for value. You know, normally I like to see a little bit bigger of a divergence there with the growth and value score, but I'll take what I can get. So what's been going on here? I think the big idea here is at the bottom of the page here we see all these good size beats. We're not talking about a few pennies, we're talking about a lot of pennies. This one's even a half of a dollar. That is a good one. You get a check plus for that. That was a very recent beat, but you can see that the average here over the last 4 quarters, 29%, they're really moving it up. As we look at the estimates, you can see that Zacks rank here is about the last 60 days, so from $1 to $1.46, that is what we like to see, from 54 to 68 cents for next quarter, and then the full year looking really good, 320 to 404. Next year really popping up there, 285 to 366. When you see that kind of movement, things must be going well, right? Well, let's take a look at the valuation here before we jump to the chart. And we can see 15 times forward earnings. Now that is just wonderful. 3 times price to book is where a value investor might be finding something. 1.5 times sales, again, very good. We see this contraction in the top line. I don't want to see that, but I think that problem gets smoothed out later. Margins, they're all right. I mean, a little okay, no-K right here. It's okay here, and it's no-K there. Let's go ahead and trademark okay, no-K. I think that was a great line. But let's take a look at the chart here, and this is why we like this thing. So we've seen Synaptics just on this sort of trend for a very long time. Then right about here, Home Run Investor, a aggressive growth service that I run, got interested in the name, and we picked it up. And ever since then, whoop, just straight up. You know, going back 60, look at the last time it was 60, testing it mid-2017, and then, you know, you're going to go back into 2016 to the times it was above then. What's the story here? Obviously, the iPhone 4 is the big story for Synaptics, and, you know, there's huge demand for the iPhone. So the iPhone 11 is really driving demand here. So that's what's driving demand here for Synaptics, electric components parts. So big beats, still a good valuation. Stock could easily roll a lot higher. All right, let's roll ahead to our next stock. And this is another very aggressive name. You know, I've talked about being very aggressive in most of my paid-for services. That would be Home Run Investor, Stocks Under 10, and Tech Innovators, and as well as a recent article that I wrote for the website, just for the free site there, just to come on and take a look at it, about being more aggressive. This is another very aggressive name. It is NeoPhotonics. That's NPTN is the ticker. It's a Zacks rank number 1, strong buy. This one, just like the other one, is an A for growth and a C for value. You know, I do like the aggressiveness and the idea of value being lower. That tells me right away that I'm on the right path for my growth style that I like to see. But I'll take it. An NA here, and a big miss, and then a big beat, and a gigantic beat. So it's kind of feast or famine here, but a little bit more feasting than famining. We can see estimates moving up here very sharply from 4 cents to 10 cents. The loss decreasing next quarter from a loss of 3 cents to 1 cent. That's good. For the full year, going from a loss of 15 cents to break even. That's outstanding. And that pushes next year up a little bit of extra movement there from 18 cents to 24 cents over the last we'll call it 30 days, which is good. So we like to see that movement in estimates. If we take a look at the valuation here, because we're looking at a low dollar stock, we're going to see some pretty scary numbers here. 2,600 times forward estimates. That's a lot, 2,600 times. But again, we're talking about a penny of earnings, break even for this year. So just take that with a grain of salt. Price to book, below 3, and price to sales 1.2 times. That's good. 13% top line growth. I like to see that. If you look at this operating margin, it is headed in the right way. Still negative, 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 but obviously being cut in half here. Same idea here on the net margin. So the valuation looks pretty good. Now let's take a look at the chart. And, it was one of these high flyers. Oh, everyone's going to need this super high bandwidth stuff. And then we never really get the promise of that super high bandwidth and just hanging out. Not as low as I've got it going here, but clearly rebounding here and estimates moving up sharply. Does this mean the stock is going to go from the 8.5 range to maybe 12? There's a good chance of that. I think if we start to see more reliance on the super high speed and that sort of thing, and they get a few more big customers, NeoPhotonics will do very well. Well, that's it for this week. Join us next time when I'll be on Skype for more stocks for your aggressive growth radar screen.